Micron Technology just dropped a financial report that literally broke Wall Street's models. We're looking at a quarter that completely redefines what a semiconductor manufacturing company can achieve in a matter of months. This isn't just an earnings beat, it's a staggering reality check on the sheer scale of the artificial intelligence infrastructure build-out as of late June 2026. For their fiscal third quarter of 2026, Micron reported a jaw-dropping top-line revenue of $41.46 billion. That is a 346% year-over-year increase. We're seeing quadruple the revenue of just a year ago. What this proves, without a shadow of a doubt, is that the insatiable demand for AI data centers is translating directly into unprecedented, structural top-line growth.
Now, what's really wild here is the profitability. Micron isn't just growing sales, they are practically printing money. They've expanded their adjusted gross margins to an astronomical 85%, generating over $33 billion in operating income in a single quarter. To put that into perspective, they absolutely blew past the consensus estimate of roughly 82% margins. This just shows how much pricing power they have in a market that is totally starved for their product.
Section 1. The AI Memory Supercycle. To really grasp this financial explosion, we have to demystify the core bottleneck in artificial intelligence. Think of standard DRAM as a worker's desk. It's where the active, short-term thinking happens. NAND, on the other hand, is the filing cabinet where long-term data is permanently stored. But HBM, or high bandwidth memory, is a totally different beast. It's like a multi-lane superhighway attached directly to the AI brain, allowing massive amounts of data to flow in and out of processors, like Nvidia's GPUs, at literal lightning speed.
And the core issue here is that AI data centers require massive, unprecedented amounts of this HBM. Because HBM is so complex to manufacture, it's created a huge structural supply shortage. So Micron is literally taking their traditional consumer chip manufacturing lines, the exact ones that make memory for your laptops and phones, and converting them to AI memory production just to try and keep pace with the demand.
Which leads us to our first major insight. Because hyperscalers are terrified of running out of memory, Micron has successfully locked in $22 billion in non-cancelable strategic customer agreements, or SCAs. These are strict take-or-pay contracts, including a first-of-its-kind 5-year deal that obligate buyers to purchase fixed volumes at agreed prices. This heavily insulates Micron from the spot market volatility that has historically just plagued this industry.
If understanding the massive scale and the contractual stickiness of this AI memory bottleneck is bringing some clarity to your investment thesis, take a quick second to subscribe to the Future Ready channel. We build these documentary explainers to give you the exact structural insights that Wall Street relies on.
Section 2. Inside the Micron Moat.
Now, a company can only demand 5-year, non-cancelable premium contracts if they have a moat that competitors can't easily cross. The crucial point here is Micron's generation-to-generation leadership. Their newest 1-gamma DRAM process node is a massive leap forward. Compared to their previous 1-beta node, this new architecture achieves blistering data transfer speeds of up to 9,200 megatransfers per second, all while simultaneously reducing power consumption by over 20%. In a data center where power and heat are your absolute biggest enemies, that kind of efficiency is pure gold. To actually achieve this, Micron is utilizing extreme ultraviolet, or EUV, lithography. This process is basically science fiction brought to life. They use a laser to vaporize microscopic droplets of liquid tin 50,000 times a second to create plasma, which then emits EUV light to print unimaginably small features onto silicon. The result of all this? A massive 30% increase in bit density per wafer. But they aren't just building hardware in a vacuum. Here is a massive development. Micron has formed a multi-year alliance with Anthropic, the creators of the Claude AI models. And this isn't just some standard supply deal. They are actively co-designing next-generation AI memory architectures, and Micron even took a direct equity stake in Anthropic's Series H funding round. They are deeply embedding their technology roadmaps together. Understanding these deeply embedded, co-engineered partnerships is exactly how you separate the signal from the noise in the tech sector. So if you're finding value in this analysis, make sure to subscribe to Future Ready so you never miss out on understanding these hidden market catalysts.
Section 3. Competitors and market share.
Of course, Micron doesn't exist in a monopoly, right? Every single percentage point of market share is fiercely contested. Looking at the data from Counterpoint Research for Q1 2026, SK Hynix currently dominates the high bandwidth memory market with a 58% share. Samsung and Micron are tied at roughly 21% each. However, Micron is aggressively engineering a takeover. Their next-generation HBM4 has secured crucial design wins in Nvidia's upcoming Vera Rubin platform. As HBM4 rolls out in the second half of the year, Micron is perfectly positioned to steal some serious market share.
Section 4. The Cyclical CapEx Ghost. Hovering over Micron's stock, though, is the ghost of the memory industry's cyclical past. To support this massive AI build-out, Micron announced a staggering capital expenditure plan for fiscal 2026 of approximately $27 billion. They are aggressively pulling in cleanroom equipment orders and building massive new fabrication facilities in Idaho and New York. This is a tremendous amount of cash flowing out the door just to build future capacity.
So the trillion-dollar question is this: will this $27 billion spend trigger a traditional glut, flooding the market and crashing prices like we've seen before? Or have the massive multi-year SCAs, the Anthropic co-engineering, and the insatiable AI demand permanently broken that boom and bust cycle? Because for the first time in history, the demand is locked in before the fabs are even built.
Section 5. Valuation and Market Outlook. Grounding this narrative in current market realities, Wall Street sees massive upside. With the stock trading around $1,050, the consensus price target sits at $1,650, with bullish analysts projecting up to $2,000. At roughly 10 to 17 times forward earnings, memory stocks are undergoing a fundamental re-rating. The market is slowly waking up and beginning to value Micron not as a cyclical commodity producer, but as a highly durable, high-margin AI franchise.
We do, however, have to objectively highlight the risks here. The Consumer Price Index for June 2026 hit 4.2%, which is the highest in 3 years. If persistent inflation forces the Federal Reserve to maintain or hike interest rates, it makes capital much more expensive. That compresses valuation multiples and can severely punish high-growth tech stocks, regardless of how spectacular their underlying earnings actually are. We are just about to deliver the final actionable investment verdicts based on everything we've uncovered today. If you want to stay ahead of the curve on the companies building the future, drop a like on this explainer and hit that subscribe button for Future Ready.
Section 6. The Final Investment Verdict. We've seen the 346% revenue growth, the massive technological moats, and the undeniable macro risks. Let's split our final conclusion into two distinct evidence-based strategies to answer our central question: does buying Micron make sense today? For swing traders, the strategy revolves around momentum and catalysts. The key drivers you want to watch are the HBM4 shipment volume metrics and any macroeconomic invalidation levels triggered by those inflation reports. But for long-term investors, the thesis is foundational. Your focus should remain squarely on Micron's widening AI moat, their incredible return on invested capital, and the lasting competitive advantages forged by the 1-gamma node and the Anthropic alliance.
And this brings us to management's ultimate promise to you. By 2026, Micron expects to return 100% of their excess free cash flow to shareholders. The evidence strongly suggests that AI has fundamentally transformed this company from a cyclical manufacturer into a high-margin technology partner. The real question you have to answer is whether you believe that transformation is already fully priced in. Let me know in the comments which company you'd like us to analyze next, and drop a like if this explainer brought you value.